Well, so you want to invest in real estate in the UK, but you're trying to understand and think what type of real estate investments are out there and what is it that would fit your criteria for you to be investing in. Is that guaranteed rents? Is that anchor tenants on FRI leases? Or is that buy-to-lets? Well, so many different types. So stay tuned because that's what we will cover in today's video. Hello everyone, if you're new here, my name is Abbas Pardhan. I'm a property investor and I'm an owner of an estate agency called 10x Rising. On this channel, I shall be sharing with you the insights of what we go through on a day-to-day basis that may assist you on your property journey. If you enjoyed the content, please hit the like button. Please subscribe and hit the notification bell so you do not miss the next video. In the UK, there are so many different types of investment asset classes that you can jump into, but it really just depends what you are looking for. Are you retiring and you're looking for just cash flow while you wait for your property to appreciate? Are you looking for short-term gains where you can make big bucks in a short period of time? Whatever it is, the strategy for you will be in this video. So in this video, we will discuss all different types of asset classes that you can jump into. So the first one is buy to let. Really, the word says it itself. You're buying a property to rent it out. So you're going to be enjoying the rental on the property while your property just appreciates over time, especially in UK because of the shortage of housing. Areas with very high demand, you will have your rental yield generally increase over time. And of course, the property value will also appreciate if you pick the perfect location. However, one thing you should also factor in while you're choosing which property to buy, while calculating your rental yields on them, make sure to also accumulate void periods because that is something that you shall have on your buy-to-lets. Generally, your tenants will be on assured short-hold tenancies. These tenancies will last from 6 to 12 months. Now, the tenants will have the option to renew their contracts or they could even leave. So, you're going to have an agent to look for your new tenants. You might just find a tenant who's wanting to live in your property for years, renewing his tenancy year after year. So that's what buy-to-let generally covers. Now, if buy-to-let isn't really your cup of tea and you do not enjoy having that little bit of cash flow, but also having a bit hands-on approach on the property, you want to go somewhere big, well, commercial could be your next target. In commercial, you've got so many different aspects. It could be serviced offices, a big block with serviced offices. You've got one receptionist manning the office building, and you've got tenants in, just like a HMO, you've got tenants renting out suites, and you pay for all the bills, electric, gas, maybe water, maybe Wi-Fi. Generally, the tenants will pay their own business rates. If it's a small suite, then they can even get exemptions on it. So you've got one option there as office building. Second option, retail units. And these kind of retail units, you can find tenants signing up 5-year leases, sometimes even up to 15 years. And these will be FRI leases, which stands for fully repairing and insuring lease. So it's super hands-off for you. They will look after all the maintenance, the bills, and pay you your rent on time. Along with office unit, you've got retail units, then you've got warehouses. Again, same thing. They could sign FRI leases with you and you can just sit down and enjoy your rent. You could also invest in restaurants and or entertainment centers. It's the same category, just like retail units. They will be on FRI leases and you just have got nothing to do. It's a hands-off investment. The third class you could invest in is HMO. A HMO is a house of multiple occupation. You've got one house and say it has 5 bedrooms. You're renting out the bedrooms individually. So you've got 5 unrelated tenants in the property on individual tenancies. And that is what a HMO is. You as the operator are paying for all the bills. However, it can be a bit more hands-on, but of course a bit more fruitful as well in terms of your yield. The fourth type of investment you could do for yourself is buying a property off plan. So this is where the property hasn't even been built yet and the developer is already starting to sell off the leases for their flats or even houses in some occasions. So you generally have to put down a deposit to secure the property, and then they've given you a target date of when they expect to complete, and or a date where they will have to have completed by, otherwise they'll pay you a penalty. You can put down a deposit and reserve the property. Now that can work out for you, because while you're just putting in the deposit, as they're coming to complete the property could have already appreciated, and if you just flip the property then and there, you could make a good profit on your initial deposit that you put down. That is the fourth type of investment that you can consider in the UK. The fifth type of investment you could have in the UK is investing in land. Now, just like property, land can also fluctuate in prices up and down. However, if you've got a piece of land that you buy, and then after that, there is massive developments being conducted in the surrounding, that's going to boost the value of your land. Alternatively, if you just buy raw land without any planning permission, and now you've got planning permission, you've applied for it to build a block of flats, you've added that value. So now you can sell it at a much higher price than you would have without the planning permission. Now generally sellers, if they're buying green land or just land without planning permission, they would generally apply for either pre-app, outline or full planning. Depending on which planning they have, it would have that much value in that land, because that's what you could do to the property to complete and add more value towards it. So land is a sixth option you also have in the UK. So land investment is also another option that you have, and that's the fifth option that you have here. The sixth one is crowdfunding. Now this is where you could gather around with 10 other investors, pool your money together, and have one manager who's operating the fund, who's then making investments elsewhere. So you could do that, or you could have other people lend money to you, whether that's a bridging loan, and you could use that money to buy a property outright, refurbish, refinance, and pay them back. So crowdfunding is also another way that you can choose to go through while investing in the UK. So these are just the 6 options that I can think of for your investment types in the UK. If you've got any, or if you know of any other, please put them in the comment section below, because I'd really like to know what else it is that I can get involved in for the investments in the UK. If you've enjoyed the content, please hit the like button, subscribe, hit the notification bell, and I'll see you in the next video.